So, welcome everybody. My name is Lauren Cassidy, and I will be your MC today through the Grinch Who Stole Your Margins, five costs that you probably didn't budget for, and we're going to dive into it. We've got three really awesome panelists with us today. We've got Brad from VP of Sales Director of Sales from Belay, formerly Countfully. We've got Jace, he is the VP of Sales at Acro, and then Izzy Coyle, our US Solutions Engineer here at Sin7. Brad, do you want to go ahead real quick and just share a little bit about Belay?
Yeah, thanks, Lauren. Brad Evano, again, formerly from Countfully, we are now part of Belay as of 2020, earlier this year. Essentially, our core service on the financial solution side is an outsourced accounting solution where we specialize in inventory-based companies, right? So essentially, that's where this partnership with Sin7 Core comes into play. So a lot of our outsourced accounting clients, inventory-based companies, and we're implementing Sin7 Core on top of performing their accounting, bookkeeping, finance work. So basically, outsourced accountants, we have a tax team, help with Sin7 implementation support. We also have the other division of Belay, which is a executive assistant solution service model as well. Excited to be here.
Thank you so much, Brad. Jace, you want to give us a little bit on Acro?
Yeah, absolutely. Jace Anderson, as Lauren was kind enough to say, VP of Sales here at Acro. We're a complex commerce B2B agency that really specializes in helping companies across the manufacturing, wholesale, supply side connect ERP with commerce and ensure that all that work that they put into developing an ERP system that works for their business ultimately works on the front end. So whether that looks like a B2B portal or traditional e-commerce experience, that's where we come in and really help navigate that pathway, bringing it all to life. And so this is very excited to be here and help kind of figure out where we can shine in the connecting data and helping identify these margin loss areas.
Amazing. Thank you, Jace. And then Izzy, hopefully people are familiar with Sin7, but do you want to go ahead and just introduce yourself and what Sin7 does in a nutshell?
Sure, yeah, I'm Izzy. I'm with the Sin7 sales team. I'm a solutions engineer, so I do a lot of sort of internal looking at integrations, accounts to see if they're a great fit. Here at Sin7, of course, our goal is to make selling products as easy as buying them. So connecting in your integrations into one place, helping you manage your inventory better, and then, of course, leading into financials, making your financials are accurate. We want to keep your accountants happy, QBO zero, making sure that all of that flows through correctly as well.
Thanks, Izzy. Awesome. I'm going to dive into it because, like I said, we have a lot to go over. So real quick, here's our agenda for today. So we've got five hidden costs of the holidays. One, returns and reverse logistics. Two, freight and shipping surcharges. Three, discounting and margin erosion. Four, tariffs and import costs. And five, overstock and carrying costs. You've hit Q4 revenue targets, hopefully, but your profits might say different. Let's talk about why this matters. The first part would be that revenue may be instant, but your costs can be delayed. And so that really changes your overall ROI and what you've really come out with at the end of the year. Returns, freight bills, discounts, and excess stock land after your holiday rush. And what you uncover in January really decides what the rest of your 2026 will be like. So we want to make sure that you're aware of all of these things before it really gets too late. I'm going to go ahead and stop sharing. We're going to dive into questions and we're going to start with returns and reverse logistics. As we get going, if you have a question and you want to know anything from Jace, Brad, or Izzy, please don't hesitate. There is a Q&A function at the bottom of your screen. Go ahead and submit any questions. If for some reason we don't get to it today, we will follow up with you after the webinar. So my first question is for you, Brad. Where do you see returns affecting profitability the most?
I mean, returns are just, I mean, in general, like inventory costs, cost of goods sold, buying goods are, can be very hard to quantify, right? That's why Sin7 really makes it a lot easier. So let's reverse it out and actually talk about sending products to a customer sending the products back. I mean, to me, that seems much more complex than buying products from actual, businesses who are in the business of supplying you money. So at the end of the day, clearly it creates just complexity, I think, just from the overall process and workflow, right? Which basically can clearly affect profitability. So just how it can affect profitability, where I see it affecting it the most, just direct costs, right? Things that you can tangibly see, right? Restocking, repackaging fees, shipping, freight in, reverse the logistics, depending upon kind of, the business model with the customer, your refund processing fees, credit card processing fees, if applicable. And then at the end of the day, labor time with your 3PL, your warehouse, your team, whoever's, restocking the packaging and the products as well. And then other things that are harder to quantify that are more kind of hidden costs, right? Where kind of strategic problems could arise, right? Like inventory obsolescence. Once you get it back in, can you actually resell the product? You have to mark it down, right? Damage, salvageable goods. When you're, bringing it in, can you actually resell it? And then at the end of the day, just the customer experience. Does the return process, even if your product's great and they buy the wrong size of it, what if that, and we've all done this as a consumer, if the return is so hard to deal with that then it basically creates an awful experience for the customer, even though they may love the product, they may love everything about it outside of that, and it could create, a decreased lifetime value to that customer. So, at the end of the day, there's very much tangible costs, intangible costs, and it can be a big number that can really affect profitability now and in the long term.
Yeah, you're highlighting a lot of I mean, I guess that's the thing. You're highlighting a lot of things that can impact your cost, right? There's a lot to be mindful of, a lot to keep track of. So kind of with that in mind, how often do you see brands miscalculating the true cost of a return? It's not just that small number you see at first. There's so much more into it. So how often do you see those brands or other brands miscalculating and kind of not preparing well?
Yeah, I mean, I think a lot, right? Just because of the complexity of it. Like I'm saying, if you don't have a system or a good workflow or process in place that can bring you that data, it can be very hard. But just a couple things that, and if you're in year one of Black Friday, Cyber Monday holiday versus year five of doing it, and having the reps and understanding kind of how to get better at the process, right? That return can be miscalculated. Again, like I think a big part of this, which kind of brings to the point of Sin 7 in this conversation, is the decentralization of data and workflow, right? Like you have your finance department, you have your operations department, you have your warehouse department. They're all speaking in different languages or maybe not communicating properly on the actual tangible relevant costs, which can create that whole miscalculation that comes into play. So lastly, or additionally, like labor. Sometimes it's hard to track labor. How many hours in the day are you actually, you're a 3PL or your warehouse person, working on repackaging and restocking gifts, so, or products. So at the end of the day, like I see it a lot. And again, it's one of those things, experience over time can help, systems can help, and having good conversations and workflow between departments can help.
Yeah, I guess if nothing else, thinking about all the things that can impact cost of a return, giving yourself some grace, knowing that other people are trying to figure out their systems, that there is a lot impacting it is for anyone on here that hasn't thought about it, this is comforting. You're going to be fine. You can figure it out, but it will take time, right? Um, maybe with that in mind, when or what should brands be reviewing in their January P&L or profits and loss? When should that be happening? What should that look like?
Yeah, I would say, outside the norm, not, in January, reset looking at Q4 again from essentially the Black Friday through, end of December, right? And how it impacts you. Sales deductions, returns, allowances, make sure you have a good understanding of that. Any adjustments you need to make to COGS or inventory based upon non-salvageable products that weren't sent back, things like that. And I think the last thing that I see, or the two other things would be comparison of costs that you thought you were incurring maybe in Q4, Q3 are agreed upon to actually what you incurred, right? Like, were you charged the correct freight or not from those aspects there? And then I think a big part of it also is the marketing customer acquisition costs, right? Can you look at that and analyze that data of, hey, based upon our acquisition or our marketing plan or discounting, did we get customers? And then how are you going to kind of track that going forward?
Yeah. And so much of that impacts really your planning moving forward and into the next year. So that's great. Super helpful. Jace, it's your time to shine, my friend.
Hmm.
Let's talk about disconnected data. How does disconnected data slow down return handling?
Well, I actually think Brad teed me up really well for talking about all the costs that are associated with it. And more often than not, lots of these costs live in their own silo. They live in their own system, whether it's where the warehouse or the shipping, every all these systems being, when they're disconnected, can lead to just black holes. They just become black holes of information. So a request may sit in an inbox. No one can prepare for it when it does that. Warehouses can't staff for it, leading to increased staffing costs. Finance can't issue credit for it. All of a sudden, it cascades very quickly, resulting in this longer time to stock. Inventory just sitting, ultimately losing value for both the company and the customer.
Yeah, you're making a lot of good calls. It impacts so many things, right? Um, do you see brands using returns data to improve the customer experience? Brad really did call out it can impact so much of the customer experience and their willingness to return to you. So how often do you see brands use return data to make the whole process better?
We're seeing it more and more, especially as these systems become connected, as you're able to automate quite a bit more of it and close those feedback loops a lot sooner and a lot quicker. Those the best insights happen when you're speaking to your customers, understanding why they're returning it, and having that tangible data can turn into immediate results on the front end. For example, if you're getting a lot of returns for sizing, that can be piped back to the product display page and update your sizing. Talk with your content marketers, talk with your marketing team about how to make that more true and reduce returns, increase that customer value. So really, it's about closing that loop, identifying that bad data to prevent the return in the first place.
Yeah. That's a really good call out is like the best win in this situation would be that it would eliminate the rate of return, right? If you can fix it, if you can be more transparent about the product, make sure people understand really what they're buying. Because nobody buys something hoping they have to return it, right? Like they want to get exactly what they're buying. So using that data to improve whatever your description is, whatever the experience is, will make such a difference.
And you'll find that information very quickly. And so we've been working with a lot of companies to refine that flow, even extend it a step or two to get better information earlier in the process to then make those changes quickly and more often make them automated throughout the process.
Yeah, the automation is key, really. If you can do that, that's a win itself and one less thing you have to worry about. Izzy, let's talk about returns with you. I want to ask you, how does having returns connected back to inventory and sales data help teams recover value faster instead of letting them sit in kind of like a limbo situation?
Sure. Yeah. So a couple of things there, especially when using a system like Sin7, if you have the workflow pre-built, if you know when a return happens, this is what our team needs to do. This is the quickest way we can get the inventory back into the system. Of course, that's going to continue to drive sales. Instead of those items just sitting, waiting to be put back in, you've got that workflow set out. You've got SOPs that have been written, especially through a system like Sin7. You can quickly get those items back into stock, back being sellable. So some efficiencies within the teams, of course, are going to help that. And then kind of like Jace had mentioned as well, once we get that information on what's being returned, if we can get that those goods back into the system, make them sellable again, it's going to give us a lot better information for what does our product team need to consider when it comes to why are things being returned. And then, of course, when you talk about things like forecasting, in the future, we can forecast a little bit better, make sure that we have all of the products that you need. If we're doing things like exchanges, making sure so that some of those items that maybe aren't selling but are getting sent out as like an exchange, we're making sure to stock up on those. So having those systems in place makes it a lot easier, a lot smoother internally. And then of course that leads to like product development improvements and then like better predictability for the future as well.
That's a great response. A lot of thoughtfulness there. I think I keep reminding myself or remembering, I guess,
Mhm.
that up to 25% of returned items won't get sold at the
Mhm.
full resale price or the full price of the item, which is
Mhm.
such a crazy thing to think about. So using the data that you're getting,
Mhm.
I guess is kind of as echoing off of Jace's point, but
Mhm.
using your return data to fix
Mhm.
whatever is being called out will really help
Mhm.
you in the long run. If it's the sizing description, if it's whatever,
Mhm.
your team is going to be so on top of it with processes and
Mhm.
things like that. But I
Mhm.
just keep coming back to you need to learn from the return, right?
Hmm.
Um, one more question for you, Izzy. Of course, I've lost my whole spot. When brands start treating returns as data instead of damage control, what's the first thing you see change operationally?
Mhm. So definitely efficiency and then like cross functionality between teams. Of course, when we're sort of being proactive about it, we've got those things like workflows that we've spoken about. We know what happens when a return is supposed to come in. We can be proactive about it, get that item back into sale if it's part of that 75% that is sellable. When we start to treat it like damage control, we're not really expecting returns. We can do them, but maybe we're not thinking about them a ton during the holiday season. We might get product back in and it might just sit. If we're not thinking returns needs to be something that we're up on top of, items may sit, even if they are sellable, they might not be able to get sold. Maybe they only get listed after the holiday season goes by. So instead of being reactive to it, sort of hoping that we don't get returns, understanding that it's going to happen, we need to analyze our data so that we know what our workflows should be, and then how we turn that into revenue in the future really helps us to be proactive on the issue. Something that I've seen recently in the news, especially around the holiday season, is that some large brands are considering actually like having bigger return fees. So not only things like the shipping label you have to return for like the freight to go back, but like actual fees. And so that's some of that where that was my face as well, Lauren, where so they're analyzing their data, seeing, okay, these are the discounts that we've had to give to sell returnable items. These are, all of the returns that we're getting. So by instituting that fee, I believe that they're hoping people are going to be a little bit more specific and detailed about what they're ordering to
Yeah.
avoid ordering the wrong thing, getting those returns, maybe enforcing some of those charges on customers.
I have such conflicted feelings on that. Part of me
Hmm.
understands, right? It costs your business so much, but from a customer perspective,
Business
I
owner, consumer. Yeah.
I would never shop with somebody again if they were
Hmm.
charging me, tons of money to return an item.
Yeah.
And in
Hmm.
in the time like we're living, where everything is,
Hmm.
well, so easily bought online, it
Hmm.
feels like we're at a very high return time, right? There's only so
Hmm.
much you can predict. So as a consumer, so
Hmm.
wild. Wow, what a ride.
Lots of different methods for, yeah, once we get that data, we're analyzing what's coming back on the returns. What do we do with it? Are our workflows satisfactory? Are we enforcing some different return policies that might help us for the next year? Yeah, exactly.
Yeah, take it as an opportunity to learn and improve your product,
Mhm.
and improve those circumstances. And hopefully by doing so, you're eliminating the risk of returns, right?
Yeah.
Wow. Izzy,
Mhm.
you just blew my whole mind. Okay.
Mhm.
Well, thank you for that. Let's go. You kind of mentioned it already. Let's go into freight and shipping surcharges. Um, Rates jump through surcharges. You've got fuel fees and last minute express shipments. Um, costs aren't tracked until you reconcile, right? So there's a lot of moving pieces to freight and surcharges. Holiday carrier surcharges can increase shipping costs by 15 to 25%, which is unreal, something that a lot of people don't think about as they plan. And many brands don't see the final shipping cost until weeks after the delivery is final. So let's dive into this, Brad. Let's talk about freight for you in terms of finances. Do you recommend a freight audit before closing Q4? Why or why not?
Yeah, I mean, I don't know if it needs to be before you close Q4 or just like you need to do it like in a timely manner after this, right? From an as anything, right? Like again, I look at this from a accountant slash, my former life Big Four auditor, right? Like are charges that you're actually being billed accurate and valid, right? So number one, are what you agreed upon with these freight providers, did they actually bill what you're supposed to do? Maybe they did, but on top of that, there could be some fine language or small language of, hey, additional fees, extra fees for to your point, surcharges, holiday, they're busy as well, right? So a lot of times they're going to be busy, and when you're busy, everybody's busy. A lot of times you have higher fees or like there's expedited fees that can come into place on your end, right? So number one is auditing and reviewing them for validity, accuracy, and what you agreed upon and what actually happened. But then secondly, what was the actual data that in the freight that I was charged and ensuring that that is going back to your planning going forward and your pricing going forward, right? Like we a lot of times anything you do in real life, renovate a house. Here's your number. It ends up here, right? Like, well, like, so like, I think going forward is after you go through a season like this, understanding that when you're planning busy times next year moving forward, did I agree upon, or what did I think I was going to pay? Audit, see what you actually paid, and then maybe put a little cushion in that going forward just for planning in Q4 2025, 2026, right?
Yeah, I think you're really hitting the nail on the head in terms of like you have to be reflecting on this to better prepare for the future, and really learn from it. Let's talk about rising carrier rates. How do they affect gross margin?
Yeah, and they affect gross margin on both sides of it, right? Bringing the product into your warehouse, transferring between warehouses, 3PLs, and then when customers send them back to you, depending upon your return policy. So you're getting hit basically in three different time frames, right? Inbound, in transit, or transfers between, and then coming back from the customer. So if the rates are higher than you expect, that could really impact your margin. And a lot of times, again, a point or two or a half point goes a long way in terms of your actual gross margin targets and the cash that you actually receive on your end, right? So basically factoring those costs in, a big part of why, as an accountant slash finance guy, why I've always really loved Sin 7 Core the last decade is like the way that they allocate and can handle landed costs, right? From freight in tariffs, those service costs that need to be applied to a PO, right? And the customer side and the refund side, it's a little bit different, but until you actually are able to do that and see the precise dollar amounts from the COGS and those items, you can't really make good decisions moving forward. So I always look at this as constantly need to reflect and look at your COGS, your inventory value, what's on hand, what are you selling at, what are my margins per product, and then especially in Q4 when you're factoring the high level of returns and the impact of freight involved there. So always look into it, make sure you have good data and you're analyzing 100% of the complete information in the cost. I mean, so like sometimes people don't look at costs and include those three other things that you got costs that you didn't realize that were impacting it. Make sure you have a good picture of it so then you understand what your costs are so you can understand how to be better moving forward.
I think what you're calling out subconsciously, but also consciously, is like the critical level of having clean data, right? And like a system that tracks it all, because there are so many other moving pieces to the holidays. What you think about it, if you don't have something that you can rely on, that's good, that's clean, you can't look at these things. You can't reflect on them. You can't grow from them because you are guessing, right? So hopefully people on this call have those systems because I can only imagine the chaos if you
Yeah.
don't. And
Well, and
I'm
a big part of it is also making sure those systems are communicating between each other, right?
uh,
Because if you have to manually put them between each other, even if you do it, there's a good point of errors, fat fingers, manual entry, and then you're just wasting time and energy when literally everybody knows if you're these brands we're talking to on this call today, you have zero time to do any of this from November 15th through, the holidays, and then you want to take a break. So like let systems do all this work.
Yeah, this I don't have a business, and thank God because I'm anxious thinking about this, right? Like the anxiety that this would cause me. So, um, hopefully all of you are doing that, and if not, we should probably talk. And I don't even mean that in a sales way. Don't talk to me, talk to Izzy, but talk to Jason and talk to Brad. Actually, Jace, I am going to talk to you now. Let's talk about fulfillment visibility. What role does fulfillment visibility play in cost control?
Yeah, well, I actually think you guys were continuing down that thread of, and Brad mentioned it, not only the systems talking together, but when they're talking together. Ultimately, fulfillment visibility is the difference between profit and loss on a per order basis. If you're calculating shipping based on a flat rate or a table rate in your cart, but your actual fulfillment center is hit with surcharges or fees you didn't anticipate, that's basically your margin gone in a lot of cases. You need a middleware or platform that pings those APIs for the true landed cost at the moment of checkout, not weeks later during reconciliation when you find out that all that revenue you made was at a net zero profit and you're sitting there just happy to get through inventory, which is not what you want at the end of the day. You do want to get through and make some money.
Yeah, again, the anxiety. You want to make sure that you're coming out on top, right? Um,
Yeah, and having that information when you need it is crucial. So
yeah.
having those systems connected, having that information live and updated, because we know how fast things change in the economy and in tariffs and regulations and fees right now. So every company is adjusting day to day. And so having that cost at your hand when the moment it changes is crucial to understanding the money, your profit and loss on each order.
So you're kind of already diving into this question, so I'm going to combine it with one other question for you. So just dissect it as you see fit. Um, I was going to ask you about common mistakes that you think brands make when reacting to last minute orders. I think you've kind of identified a few, but maybe talk to me about if there are any other mistakes you want to call out, but also how does your team help teams choose smarter carriers in real time? How do you help them prepare for that?
Yeah, so the panic ship I think is less common in B2B, in the B2B side of the world where we operate more often than B2C. Not that we don't, but it's just less critical oftentimes. There's bigger orders, there's a more consultative sales process through it. So we don't see it as often, but when we do, it's often we see teams defaulting to the fastest, more often the most expensive option without checking about the margin impact. They oftentimes will prioritize the save over the profit, sometimes due to naivete, sometimes because they don't have that information available at their hands. So, there is a better system there, and it often means slowing down to speed up. A better system might show that ground shipping might actually get there in one day because of the proximity of the distribution center. But ultimately, trying to overnight it on a plane may end up being the obvious answer, but may not be the best one. So what we do is try and connect those, like I said, connect those teams in real time to that data. And so really what it comes down to is that back end logic. So when a system comes in, we don't want to put it on the team to figure out that quickest save that also has profit in there. We want a system that instantly compares those rates across all those integrated carriers, based on the order, based on the weight, dimensions, destination. And then we can also set rules based on that, which don't limit your team, but often will give them the best case scenario to move forward. For example, like if the margin is below X, disable these shipping options. Really, we want to connect these systems to remove the emotion from the decision and let the data protect the bottom line.
You made a lot of good clouts there. One of them is slow down to speed up. I think, in this time of year, it's really easy to panic, right? And to just make rash decisions. So having a system set up and working with someone who can help you really look at the reality of the situation. This is the best option because of this weight, because of this, because of whatever the reasons are. But being able to see that in real time where you're looking at hard data and data doesn't lie, right? As long as it's clean data. It should tell you exactly what you need to know, and removing the emotion from the decision, the panic from the decision, will just benefit you, especially in a time where so much is emotion driven, right? This time of
For
year.
sure. We're all human. We know how big this day is. These days are, I should say, between Black Friday, Cyber Monday, and Boxing Day, and it's easy to get caught up in it. You want to be the savior, but the data doesn't lie, and it can save you in a lot of times when emotion can't.
And kind of what you're touching on, and this maybe leads to my next question for Izzy too, but preparing yourself for it, that we're in the thick of it right now, right? But we can get ahead for next year. We can start doing things now so that next year we aren't emotion driven. But doing these preparations, getting ahead, making these plans can help you in the long term. Izzy, let's talk about fulfillment with you. How does real-time fulfillment and inventory data change how teams choose carriers or shipping methods in that moment?
Sure, yeah. So, I mean, when it comes to fulfillment, like during the holiday season, everyone shops at a different time, right? Some people are early birds, they get their shopping done like in the fall, even prior to Black Friday. There's some people who are ordering heavy on Black Friday, some who are like late shoppers. Maybe we're going after Black Friday, doing some of that later shopping. And so, with that, we've got a longer timeline, compared to something maybe like Valentine's Day. We've got a longer timeline as to when people are purchasing goods. We've also, of course, got different trends within logistics during those times. So some of that earlier, some of the earlier ordering trends, if we're on top of that data right away, even, a couple weeks prior to Black Friday, if we can get on top of our Black Friday data, use that moving forward for those last minute shoppers at the end of the season. Utilizing that early enough in the season is going to give us some insight into our carriers. We can also check metrics of, are they on time? Are they meeting their promises as far as what we're expecting them to be shipping? Utilizing some of that data earlier within that shopping process will allow us to, through the holiday season, make some of those better decisions. So it's not like we have to pick something a month prior to Black Friday and stick with it. Like, the ongoing analysis of the data is going to help it get easier. Maybe we have some trouble on Black Friday. We can use that data to inform us on which carriers are going to be best to utilize like during the rest of that holiday season. And then, of course, year over year. Logistics change. Companies might change year over year, different rates, different like operational options that they have. So we can use some of that data from previous years as well. Sin 7, we store your historical data for as long as needed. If you want to look back and compare what happened 3 years ago to what happened last year, maybe develop some trends, that's always an option. So utilizing that data during the full like holiday fulfillment time, and then making those point in time better decisions. We don't have to stick with that decision through the whole holiday season. If we're noticing trends with our carriers, trends with our customers, we can make some of those changes. Of course, that drives into integrations, which Jace mentioned as well, making sure that we're on top of our automations for those things. Just helping us to get better with fulfillment as that time moves forward. And then, of course, year over year as well.
Yeah, again, this really comes back to like good planning and looking at the hard data to help you make clear, not emotional decisions.
Mm-hmm,
Thank you, Izzy.
mm-hmm,
Let's move into discounting and margin erosion. So high revenue during Black Friday, Cyber Monday often hides lower than expected net profit. Deep discounts are rarely tracked, and that can go against your actual margin. Um, I have a couple stats I want to call out. Black Friday, Cyber Monday discounts often reduce gross margin by somewhere between 10 and 30% per SKU, which is a huge amount, something you really need to be aware of. Brands frequently track revenue lift and not margin impact. So while they're doing promotions, they're really not accurately doing the tracking that they need to be in terms of revenue. So let's really dive into this because I think a lot of people in theory think that a promotion is a great idea, but in practice they're losing money and not realizing it. I'm going to start with you again, Brad. How can brands assess whether their discounting strategy is actually paying off?
Yeah, I think step one is just basic, like let's step back and not even focus solely on like the specifics of this conversation, right? But let's look at it. You need to have good, accurate accrual-based financials, and you need to basically ensure that you're looking at gross revenues, net revenues after discounting, shipping costs, right? Restocking fees. You're looking at accurate COGS. A lot of times brands will come to us that are looking at cash basis financials and P&Ls, and literally they're running their business out of their bank account. Well, guess what? Oh my God, look at revenue. It's sky high. It's going. Yes, top line revenue growth is great, but literally if your gross margin's negative or becoming negative because you're discounting too much, then what's the whole point of this, right? Some of our biggest clients in the early days that kept growing, that were having e-com already went out of business because they weren't properly managing cash and margins and understanding their business, right? So I think step one is just having good accrual-based financials, making sure you have everything factored into your P&Ls. And then once you get that, getting into those channel level P&Ls, right? Of like, what is my P&L for my ecom on my website, Shopify? What is my P&L for Amazon? What is my P&L for, retail, where you're literally factoring in all aspects of revenue, COGS, logistics, fulfillment, direct advertising, commission, sales fees, right? You need to have all that data in there. And then you can actually understand, does this make, like, what is my actual margin, right? Like after discounting. And so then you can look at Q3 versus Q4 and then look at prior years, right? So that's, I think, step one is just ensuring that you have all of that in place. And then you can once you have the accurate data in place, then it's, did this pay off? And I mean, it goes to the, kind of other aspect of how do you recover post holiday. The whole point of discounting is to get more sales, but also to get new customers, right? So did those new customers then turn into repeat customers and start buying full product at full margin, right? That's the whole point of it, right? So ensuring you have good analysis from a customer acquisition cost, lifetime value of customer, and actually seeing when that actually pays off. And then it's a constant balancing act. It's never going to be like I said and forget it forever. It's going to be analyzing data, looking at it, moving forward to the next month or quarter, and then kind of analyzing consistently.
Yeah, you bring up a really good point that I think is frequently forgotten, that brands create these promotions with the hope that they are engaging new customers, that they are keeping them long term, that that growth continues, as something to really consider. Because otherwise, if they don't come back, you've just lost some significant funding, financing. Have you seen brands recover margin post holiday with better planning?
Yeah, yeah, definitely. And kind of, it's back to kind of what I was saying, right? So, post holiday, essentially, again, like this kind of even factors into marketing, right? Like, hey, did I get a new customer? How do I properly target that customer to get them to buy another good, another good, another good, right? And maybe it's promotions after the fact. Hey, I mean, I was actually thinking earlier on the point one, we're talking about returns. Instead of giving full returns on their credit card, does the returns become a gift card, right? Like you need to spend money here, right? Well, at a minimum, then you have that money, it's a gift card liability, but they're going to buy product in the future, they're not going to use it, right? So understanding, that in place and then kind of getting a good aspect of how your customer works, right? And when they're going to have repeat purchases, are they going to? And then just understanding kind of what products work, right? And what products that you discounted actually did they buy? And then after the fact, which products are they buying, right? So again, like getting the customer in place and then targeting them, getting feedback, and ensuring that they, are repeat purchasers is the whole game of e-com business.
Yeah, you're bringing up a lot of really good points in terms of like keeping these customers and keeping to engage them. Um, Jace, what consumer behaviors did you notice during this Black Friday, Cyber Monday, that maybe brands didn't expect?
Yeah. So speaking about B2B customers specifically, because that's where we spend a lot of our time, we noticed, I don't want to call it the Amazonification of B2B buyers, but they are expecting a more digital experience. They want to shop when they want to shop. They want to be sitting at 11 p.m. at night, scrolling through their custom priced warehouse online. There's this move to digital that we're seeing really permeate the B2B space. And as that buying demographic gets younger, they expect more out of their suppliers, their wholesalers, and their manufacturers. And so we're seeing a lot of the trends slowly shift in as B2B sales get more digital. You are seeing some additional Black Friday attention being put to it, where traditionally these long consultative human-based sales processes didn't really have that same excitement around these holiday dates and these sale seasons. So we're seeing a very big push towards digital in that space, and a lot more attention being put to these days by those suppliers, manufacturers, and wholesalers.
A little different of a question. Where do you see panic discounting happening most?
I'd love to point to a particular customer industry, but ultimately what we saw panic discounting happening most when inventory visibility was poor. A brand may see a warehouse full of SKUs and panics because they don't have the data to know why it isn't moving. So they slap a flat discount sticker on top of everything. And really, this is the lack of inventory visibility leaves you with a blunt instrument. If they have better data, if they have better inventory visibility, you can see that particular product A sells well at full price, where product B needs a discount. And what panicking discounting is really creating margin erosion across the board. You want to increase visibility and operate with a precision instrument rather than something more blunt that kind of limits your ability to make informed decisions with your stock and with your products.
Yeah, you're making a really good call out about like it's almost reactivity, right? You see something, this large number, and oh God, we got to get rid of everything. So instead of reacting that way, what tactics do you see that help brands preserve margin without losing sales?
Yeah, we saw a couple, and we helped enable a couple throughout some pretty solid integrations and some great technology partners. But In B2C, especially the complex side of it, instead of discounting, we saw bundling with slow-moving accessories at a slight aggregate discount as a great option. And then we also saw a lot of timed and tiered discounts. For example, leading up to Black Friday, putting a 15 to 20% off can create that FOMO, that fear of missing out, and allow you to only then minimally cut margins on the actual Black Friday day after the point at which a lot of inventory has also been sold off at a higher margin. So it really depends on what you're selling, but there are a number of methods and practices to help keep that margin in sales while ultimately moving the products you want at the end of the year, because a lot of people don't go into Black Friday and Cyber Monday to make huge profits. They use it to clear out old inventory, and that profit is just a bonus. So it's really about understanding your objectives, understanding your products, and what's moving and your customers, and then making decisions based on that.
Yeah, I really like the call out of like going into it and knowing what your objectives are, right? You have a plan for this entire season, but especially Black Friday, Cyber Monday. What are you hoping to accomplish? Um, Also really resonate with the FOMO buying. I am a victim. I 100%. I'm like, oh, I need this, right? What if I don't do it now? So that
Mm-hmm.
is works very well on me if anyone's trying to sell me anything. Brad,
And
did you have something? Yeah.
yeah, on the panic discounting, you also like Jace brings up great point on inventory visibility and what sells good, what doesn't sell good. You also need to make sure that finance and the way your cash balance and how you're running your business, that those teams are aligned, right? Because if they're like, we need money to pay our loan or our business, panic discounting is going to ensue when over here it may not, right? So basically it goes back to departmental conversations and you need to have a plan of attack going in. And then if things change, great, change it. But you can't just work on a day-to-day basis here. We need to have a plan. What are we going to do if A, B, and C happens? Then when are we going to adjust and how are we going to impact that going forward, right? Like this year, I feel like Black Friday and Cyber Monday literally lasted 3 weeks. I still think I'm getting emails, right? So clearly you can still take advantage of it after the fact, right? From a business perspective, but making sure the right hand's talking to the left hand is a huge part of this conversation.
Yeah, that's a great call out. It goes back to like the clarity in your systems and really the conversation that needs to be happening across your business. And hopefully it is. God forbid it's not. But if it isn't, this is your call.
Yep.
Talk to everybody. Everybody needs to be on the same page.
Yep.
Kind of related to that, Izzy, how can better demand forecasting help teams avoid the panic discounting with the without risking stock sitting idly?
For sure. So this is kind of another one of those year-over-year data is great. And with Sin 7, even if you haven't used our system, say like this year's Black Friday, the previous year, we have options for historical data uploads. So we can even analyze data that maybe we haven't processed in the past, but you want to do an analysis on. It's going to allow us to see when it comes to stock planning, what are our popular items that we will need to stock up on, because those are going to be selling anyway. If we're doing things like bundling those with some of our less selling products like we talked about, making sure, of course, that we have stock for our best sellers, and then knowing with the data of what was discounted and then what was selling in months like January and February, making sure not to overstock those products. Our Foresight AI module does a lot of overstocking analysis to make sure that with products, of course, the goal is to get right in that happy middle zone, right? We don't have too much, but we also don't have too little. Holiday times can be really hard to predict that, but utilizing that Foresight AI, some of that historic data, is going to give you a lot of insight into what do we need to purchase, what do we need to prevent from overstocking, and then, of course, analyzing the discount data afterwards to see what products are being sold, what discounts are we making. So, of course, we can do that cross-functional with things like accounting. Next year, this is what our budget plan is. When we're talking about things like forecasting, making sure that we have the budget plan, we're communicating that to our financial department, and then that we're prepared not only to like sell these goods and analyze our margins, but of course we have to purchase them as well. Thinking about things like landed costs when we bring them in, what should we expect? Again, utilizing historic data. So making sure things from the past are being considered in the future, and then having the availability of that data. If we need to look at those things like discounts to make some specific financial or purchasing decisions, being able to do that.
I really appreciate you calling out like that you can bring in past data that maybe you like if you're using Sense7, you can bring that in. You can
Mm-hmm.
actually still use it to help you build a better case for this year and really for next. I think that's a great call out. And again, it comes back to clarity, being organized, having everybody talk to one another so that you're not just panic reactive.
Mhm. Mhm.
Let's dive into tariffs and import costs. Not surprisingly, we've talked a lot this year about tariffs and how they've impacted businesses. Tariffs can add between 10 to 25% to landed costs, depending on the category you fall into. And many brands fail to update pricing or COGS immediately after tariffs change. So there's just a lot that this can impact that you're not thinking of in the moment, and understandably so. So, Brad, I'm going to start with you again. How much do tariffs actually impact profitability when they are properly measured?
A ton, right? It depends upon like how much as a percent of your kind of, total sale price is the tariff cost, right? Which can be huge and very big. It could have increased dramatically, right? So, um, if it's properly measured, it impacts it. If it's improperly measured, you're not good. It's not good going forward, So making sure that you're assessing it when you're looking at your landed cost is a huge, part of the conversation, right? So you have the direct impact on the cost when you're actually paying for the goods, but then it's separately once you're paying that tariff and when you're actually analyze, let's say you have that actual data, right? And hey, here's my actual landed COGS now with increased tariffs. How are you pricing your product, right? If you're just going ahead and marking up that product based upon the landed cost, then all of a sudden you could lose customers because you're at a higher price per point, right? So basically, it impacts you initially when you're paying for it, but also how are you actually going to be pricing the products that you're selling to your customers?
Well, this kind of leads into this question. You started to touch on it. Operationally, how does a tariff increase affect, sorry, how does a tariff increase affect supply chain decisions?
Yeah, I think
That's also for you too, Jace. I just feel like these touch. Sorry, this was really a question for Jace, but I think that these
Go
complement
ahead,
each
Brad.
other.
yeah. Basically, again, and then I'll start on it. Just, if it's number one, if you have the accurate number, stepping back, right? You need to have good, accurate landed COGS, even if the tariff increases or doesn't. And again, since Evan Core does a fantastic job of allocating that to products, and you can assess that going forward. So a key part of this conversation is know where you're starting from. What is my actual cost I'm paying for these products at this tariff or even at this tariff? So understanding those situations and having good data is a basis of pricing your product, right? What are my margins? Are you actually, calculating your products based on a specific markup or margin or things like that, right? So understanding how that increased tariff cost impacts your customer at the end of the day. And then additionally, on the supply chain situation, looking backwards, if tariffs are increased, can I buy more product, let's say if I have cash at a discounted rate from my vendor, which could also lead to lower COGS or a lower tariff, right? So that it can go back downstream of actually how you assemble your product or get your product into your warehouse. And then I'll let Jace kind of take the next part of it.
Honestly, you took the words out of my mouth there. My first thing was it forces a landed cost audit right off the start. Like you said, you got to know where you're starting from. If the tariff jumps 10% and your data isn't automatically updating the cost basis in your commerce engine or your IMS, you're effectively selling at a legacy price. Really it comes down to operational agility here. Is your information audit or automated? Can you get those automatic updates via integration? Like, how are you doing that? Because ultimately, no one wants to be manually updating 5,000 SKUs a week before Christmas here to ensure they're not selling at a loss or selling at a lower margin. They want to make sure they're selling at the most at a point which the data is most up to date, and having that information at your hands is critical to ensuring you're operating in a way that makes your business run properly. So having that information, knowing where you're starting from, and having that real time ability to make those decisions is critical to maintaining that margin.
So with that in mind, how can operations and finance teams coordinate on tariff planning?
So I believe Brad will be able to touch on this as well. But from our perspective, we always try and operate off a single source of truth. We typically default to the IMS or the ERP, but those systems have to be integrated with the WMS or the PIM. And because it's so challenging when all those different teams are working off different systems. And so aligning them, ensuring they're talking to each other, but ensuring that there's that single source of truth that's really driving the conversation and giving that underlying foundation upon which all those other systems work off of. So really having that unified data, that unified system to really drive the information that helps teams create or helps teams make those informed decisions.
Yeah. Yeah, I would say like that's a big part of it when some folks come to us without like that haven't had a good like accounting function or leverage a good vendor or whatever. Basically, it's funny. Some people have this spreadsheet they're working off of, and another department is working off this system. And it's like, wait, we need to talk about, apples to apples. So I think just unified system, what data you're looking at. And the other thing I would say is then once you have all that information, those fully loaded COGS in the costs that we're talking about, then analyzing data with your finance and operations folks are saying, okay, here's the best case scenario tariff, here's the worst case scenario tariff, which impacts my COGS. How are we going to impact that, right? So you have like most probable scenario, worst scenario, best scenario, and then do that scenario planning because then that's going to help you kind of understand and better make decisions on tariff planning, buying, selling, etc.
Yeah, thank you both. Thorough and in a very confusing, ever-changing topic, trying to prepare as much as possible is so important. Izzy, why is landed cost visibility so critical when tariffs change, especially if teams are selling across multiple channels?
Yeah, so super critical to know what our costs of goods are. It helps us to make like point in time decisions on pricing changes. So we don't want to wait until next month, obviously, when these things, maybe we have like a periodic sync to financials. At the end of the month, we can determine what our COGS are, how tariffs are impacting it, and then maybe we make something like a pricing switch or make some internal decisions. With systems like, if we're talking about like Sin 7 Core and like say QBO, we have that perpetual sync. As soon as the order ships, we come up with the COGS. We do a daily journal sync over to QBO. So it's really giving you the point in time reporting where if today I want to make a decision about this week's cost of goods sold that I've been seeing, I can really easily make those, like do that analysis and then through Sin 7 make the price updates. Whether I'm doing that in bulk, whether I'm doing it simply and just basing it off of that landed cost with a markup, having that point in time data, the perpetual data allows us to make those decisions instead of it being periodic. We're making those decisions later, or we maybe just don't have access to the data. Sin 7 is always coming up with those COGS, considering things like the landed costs as well. We always track on purchases, any landed costs, customs, duties, tariffs, whether it's on that invoice to the supplier or whether it comes from someone else, whether you pay the supplier or not. We're tracking all of those costs. We're calculating it for you. So Sin 7 is doing a lot of the heavy lifting there, coming up with the calculations, syncing it over to your financial system, which is making it easy enough for you to go in, make those point in time decisions on how our tariffs and things like that impacting our costs. Let's make those updates again efficiently through Sin 7. Yeah.
Awesome. I am going to transition us because we are in the final 5 minutes of today. We have one quick topic to go over, which we've kind of touched on throughout the entire webinar. It's overstock and carrying costs. Excess inventory or overstock can cost 20 to 30% of its value annually in carrying costs. So storage, insurance, labor, all of those things. I'm going to start with you, Brad. Brad, I listed several questions for you in this topic. I'm going to ask you to pick one. Actually, I guess I only gave you two. What's your advice for brands sitting on excess inventory, or how does carrying cost affect budgets? You could also combine these into two
I'll
questions.
do, yeah, I'll do two,
Yeah,
both of them quick.
go
On
for it.
the sitting on excess inventory, you got to segment your inventory. Like, right, what is A list high demand? Don't ever discount that. What is B list seasonal, good return rate, C list slow moving. Depending upon that, you need to discount it, get them out of the door, get the cash in the bank, right? So segmenting your inventory, Jace mentioned this before of having inventory visibility. What actually should sell full margins? What shouldn't? Get rid of it. Again, that money, that inventory is cash, right? And then going to how does it affect budgets? You have to understand kind of several different budgets, right? You have the cash flow and finance budget, right? Tied up working capital. You have basically tied up working capital of inventory of non-saleable inventory that's impacting you running your business. The finance team needs to understand where they're basically need to cut discretionary spending or how to get more loans if we have a higher inventory that didn't turn, right? So getting that impact to cash. This goes back to what I said before. Finance and operations need to be talking to each other. The operations logistics budget, right? Higher warehousing costs if you have more inventory. So literally just sitting there, it's incurring more costs for you, right? Storage and rent overruns, increased labor and handling. And last thing, sales and marketing budget, right? Is your sales and marketing team wasting time on figuring out how to, promo and discount, those C list and B list items when they should be focusing on how do we promote those products that we want to sell full margins year round, right? And then additionally, increase customer acquisition costs. So when you want a lower CAC and a higher lifetime value, right? Well, when you have bad products that people aren't buying and you want to get rid of them, your CAC goes, higher and your LTV goes lower. So understanding and looking at it all there is going to like help you out from an aspect of all this.
Yeah, you bring up really, really strong points, especially, and I don't think this is ever talked about enough, segmenting your inventory and really understanding, the A list, B list, C list, as you mentioned. Like, I think that's so mission critical and it impacts so much of your other decision making. So that's great call outs. Jace, um, I think I'm going to hit you with what strategies have you seen work for clearing slow moving items? Let me know what you think.
Yeah, for sure. So we're building the sites. We don't run the strategy, but we have helped enable some of our customers implement some creative strategies. And one of the ones I want to highlight is something that Sin7 does well with their B2B portal is creating kind of these unique experiences for VIP customers that makes them feel special while helping you liquidate inventory without damaging that public brand images by having clearance tags everywhere. And that's with specific, what we call it like a B2B outlet strategy. With specific gating, you can really show specific, you can show a select amount of customers this discount section, this wholesale section that gives them exclusive access or exclusive pricing, which allows them to get in and move some of that, you know, less popular stock. So we've seen a couple different strategies, but there are a lot that your IMS and your ERP enable by the permissions and the ability they allow through the selling and the B2B portals that are available.
Great, thank you. You touched on this a little bit, but and Izzy, I want to leave you time for one more question, but I do want to ask this question. How does forecasting accuracy reduce excess inventory risk?
Well, Brad touched on it too. You can't forecast what you can't see. So if your sales channels, your Amazon website, EDI, phone sales are siloed, you're flying blind. And so unifying that data, you get to see when sales are up, when phone sales are down, you get to balance the forecast, and accurate forecasting requires that total channel visibility. And so ensuring you're breaking out of those silos is key to reducing that inventory risk.
Thank you. Izzy, my last question has kind of already been answered, but I feel like you could really bring us home with this. So, no pressure. How does making one view of inventory across all channels change how confident teams feel making purchasing decisions for the next season?
For sure. So with systems like Sin7, we have availability by location. So you can see if you have multiple 3PLs you're working with, if you've got internal locations, contract manufacturers, what is our inventory everywhere? So not only giving your team visibility into that, we'd love to have human eyes on it, but then of course that informs the system about sales per location, sales per channel. And to mention it again, our Foresight AI tool is super handy in this way. We can do the analysis by location, by customer if we're dealing mostly in wholesale. So giving us those estimations per location so that we can make sure if we have Amazon FBA, that might sell through way more during the holiday season versus something like a 3PL that we have in Canada. And so being able to see by those locations what's going through them not only gives your team visibility if I need to go in and look, make my own human decision, informing, of course, our Foresight AI is going to be critical there because next year we're also going to evaluate things like your growth. If there's any seasonality that's coming out with your products, maybe some are great for holiday sellers, they're not really selling during the rest of the year. Enables us to do that analysis and then help you get to that point where we're right in the middle. We don't have too much, but we also don't have too little.
Thank you. You did run home exactly what I wanted you to say, so I appreciate you for that. I want to take the time real quick because I know that we are at time to thank all three of you for being on this. We went over a lot of information today. I will be sending all of you a recording of this, as well as a few other resources, and a way to get in contact with Jace and with Brad. If you have more questions for them and their team, I really recommend, if we've highlighted anything today, I think it's that being organized, having the right resources in place is going to help you for the year to come. And Jace and Brad and Izzy are all great resources to help you get ahead and do that. We do want to see you succeed. We do want to help you feel confident as you're planning so that you don't experience hidden costs next year. If you have the right systems in place, these costs shouldn't be so hidden, right? That is the goal. So we will send all of this to you after. Please feel free to respond via email. I'll be sending this out so you can ask any questions and I can get you in contact with whomever you need. But again, Jace, Brad, Izzy, thank you so much for being on today. And everyone, I hope you have a really successful holiday season.